All right, let's try that now. Might be a little bit better. I hope. No audio. All right, bot. There we are. Okay. No problem. I just talked about the meaning of life and the purpose that we are all here and, nothing important. All right. So here's the deal. We have Kapow. Those of you that could read lips. Anyone could read lips here? All right. Those of you who read lips know exactly what I said. We are waiting on Jackson Hole. We are waiting on what Kapow is going to say. We are waiting on opportunities on the daily time frame and on the 5-minute time frame in order to either do one of two things. If you've been watching those daily uptrends, you know that we're looking for pullbacks. We want to buy the dip. Now, if you're in the Sector Secrets Mastery, we're in those positions, right? And it's looking pretty good for the follow through of things like long calls in Amazon, long calls on financials, CVS, even healthcare is holding its own. That's probably our biggest laggard, but definitely waking up this morning. I'll take that. All right, next up is what are we seeing in terms of intraday opportunity? Gang, this is where, from an intraday standpoint, we're going to be looking at the HPMRs for those of you that are not familiar with that. And by the way, I'll be in the Sector Secrets Mastery Room for our typical day trading as we do Monday through Friday. But most of you probably know and saw the alert that we're going to be going to right about 11 o'clock. And by the way, I'll be in the day trading room as well. So my day traders, you'll get to see how we fade HPMRs in a highly volatile environment. This is a caution day, gang. We'll talk about day trading the options that I like to trade, as well as the underlying futures. So we get to choose our own adventure, micro futures, mini futures, or options. So we'll be doing that to about 11 o'clock today. And mixed in that is going to also be, are we getting movement lower to levels that we can buy the dip? So we have an entire list of alerts that we've already sent out where if we get down to that zone, those triggers are going to go off and we know then what options we want to buy. Long calls, long puts. We keep it simple with those directional debits. All right. So as always, gang, the best part about this show is usually when it has sound. So thank you all for bearing with me. I don't know what that was. I just had to recapture the audio. But anyways, glad we have audio and video. And let's go ahead and get to your questions as always. All right. Do I ever trade coffee futures? I drink a lot of coffee. You think I trade a lot of coffee futures. This morning, I've already had 2 mugs of coffee. So now I'm actually having a root. I actually like these a lot. Not super caffeinated. You have stuff for your eyes in it, all sorts of things. But do I trade coffee futures? Not as much as I used to. Not as much. And the reason is when you look at meats, softs, grains, they're a lot more weather sensitive. They're a lot more sensitive to factors that would not necessarily be tethered to monetary policy. Energies, treasuries, indices, currencies, those tend to move a little bit more sympathetically with each other as opposed to meat, softs, grains. And really for that reason, that slight lack of that disconnect, right? At some point, I've just found that if I am going to trade those, it's a lot less, and I'll look at daily and sometimes weekly time frames for those. So just not as much. Is there a liquid ETF for it? I think there's Joe, but I don't believe at the actual ETF level. I believe there's plenty of shares at trade. Although please do double check that. But the ETFs for Joe, I think, are very, very low. So not really an ETF alternative like we would have in gold with GLD or the way we would have with the long bond and TLT. So not really. All right, next up, Philip asks, on Wednesday, our Amazon trigger went off. Yes, but I wasn't sure if it was prudent to enter an order 5 minutes before the market closes. Is that normally okay to do? If I get my price trigger, yes, I will take that. Yes. I thought it triggered a little bit earlier than that, but I know it was towards the end of the day. And yes, I will still take that. Yes. Absolutely. And remember, that was an agro level trigger. So remember, you're already budgeted in a way that's already very risk conscious. When yesterday, I had to tell y'all, I cannot wait to be able to share this conversation with you all over at Countdown Trader and also here at Charts and Coffee. And if you haven't checked out countdowntrader.com, perfectly free, lots of resources, and it's a consistent conversation about the tools that I use and how I'm using them in this environment. One of the conversations that we're going to have really soon is about risk and reward and why those risk reward ratios and why those win rates and crunching the numbers is so important. And so kind of along those lines, Philip, because we had that agro only, we weren't backing the truck up, so to speak. So great question. And yes, it's valid. Sure. Next up, which one? Abbott or not Abbott? What are you looking at? ABT? Yeah, Abbott. God, I got to clean these glasses. Hang on. I saw APT. This is not good. All right. Abbott. So very different. Okay, so very disparate. All right, Cleveland Cliffs. So opening up these three, ABT I want to look at within the context of XLV. And ABT is actually not one of the stronger names within it. We do have a handful of pretty good looking names. Really, really good looking. All right, let's see. Here we go. We have some good looking names. UNH is one of them. Danaher is another. Anything above that 200 propulsion at least will get our attention. So Thermo would be another one. When we look at CLF, now I'm looking at XME, SLX, things of that nature. So the relative outperformance is going to be huge. So I'd probably say a pass on CLF for now. And again, I'm looking for double green. So you got it with TJ Maxx, which can be a little spotty on the option chain. However, beautiful by the dip. Oh gosh, this is great, Bob. Love this one. Your last one, you saved the best for last. Double green, test of the wave, test of the 200. That's awesome. We get to check a lot of boxes on that one. So I do like that one in terms of that pullback into the wave. But the level that I'm looking at really precisely is about 64 to 63, 65. So in that 35-cent range is our zone. And that's how specific I am with any alert that I send out. We don't just buy to buy. We wait for a very specific zone. A lot of you know, as it said, no trade without that trigger going off. So no trigger, no trade. Until that price is met, there's no reason for me to put an order in the market. So thank you for the question. TJ Maxx looks great. Which program do I use to follow the stocks in each ETF? Barbara, I don't use a program. You can actually use anything from, let's see if I have this up right now. You can use anything from Yahoo Finance to, I think Zacks has this information, I believe. You can look at any of the ETF sites. I like ETF DB. So that's what I use. It's just a website that has information about the holdings and the percentages and the flows of the ETF. So when you crack open SPY, you see what's within it and the weighting. So I like ETF DB. If anyone has been with me in the Sector Secrets Master, the Futures Room, or any of the rooms that I'm here in over at Simpler Trading, you know that I use ETF DB a lot. It's almost always up. So let me show you here real quick. I'm a fan of what they do. I don't know the folks. I will say that the ads on this site are bonkers, but I've been a subscriber. I like what they do. So here is, for example, XLV, that aforementioned conversation about Abbott. Take a look at XLV. I'm able to click on the holdings. You can do this on Yahoo Finance as well. Voila, high concentration weighting. United Health, 10.3%. J&J, almost 9%. Pfizer at 5.5%. These stocks are not equally weighted. This is really the heart and soul of what it is that I do to scan the markets and understand what my watch list should look like and which stocks are going to move with one another. All right. So thank you for the question. All right. So Next up, are there any sectors or indices that are invincible to Powell? Good question. I would say that if you are looking for things that won't be affected as much by Powell, probably those aforementioned groups, softs, grains, meats, are not going to be as influenced. Uh, Individual stocks that are not heavily weighted within the broader averages or within the heavily weighted sector. So you really want a stock that's not heavily weighted within the passive investing universe. So that's where I would say you want to focus on. But seeing how macro and Powell is, that's macro. I mean, whatever he says is going to move the macroeconomic needle. If we have knowledge about where rates are going, that's going to be a more certain trend. There might be a lot of volatility between now and whatever message he wants to convey to the market. But once the dust settles, the most clarity is going to be in the wake of that. So I really want to be focused in those corners that are going to be affected by Powell. But from a risk standpoint, it's best to wait till after the dust settles and we see what kind of volatility we can get either as he's speaking or at the tail end of whatever he's going to say. See if it creates the pullback and then fade, buy into weakness, that moves. I hope that makes sense. All right, next up, Raghee, I've read your book. Okay, you read my Forex on 5. Okay, gosh, that's about 10 years old. That's a blast in the past. Thank you. Read it a few times. I'm struggling with my entries. I'm a trend trader. I wait for price to test the wave before I enter, but I keep getting stopped out. So remember, King, when you are using the wave, remember, moving averages are kind of obnoxious. And the reason for that is they don't ever think that they don't know, right? We probably know some people in our lives like this. Moving averages always think they're important, but they're not. Moving averages have to be used within the context of a trend. So my first thing to help you kind of maybe go through where the wheels are falling off the wagon is, are you using moving average in a chop? Are you using the grab candles to help you identify when we are trending up or down? What is the process you're using to confirm that we do have a trend and therefore pullbacks to the wave or bounces to the wave are valid? So I would just fathom to say, chances are it's the underlying structure that's being skipped over and you're just using the wave. A lot of folks do that until they realize, oh, structure dictates strategy. Am I using the wave in a non-trending market? Okay. So I hope that helps. All right. Next up, looks like a leak on Powell. Well, who knows, right? Here's what I will tell you. We can measure it. Leak, no leak. Here's what's cool. We have a decoder ring. We have a magic decoder ring, right? What is it? December target rate probabilities and February target rate probabilities. It is right now, and this is going to be important, gang. Right now, the December 350 to 375, which has really been the leading expectation throughout 2022, seems absolutely set. So actually, December may not be the target rate probability month to watch as Powell is speaking. Now, the question really is, are we going to see another quarter point hike in February? That would be slightly more hawkish than it has been expected. However, this 375 to 400 column has been visible for about a week. So this is not new news. The market, quote unquote, knows this is possible, not probable, just possible. Watch the February target rate probability just before Powell speaks and then as he is speaking, because if there's going to be really any big news on Powell, right, it's going to be, are we or are we not going to see that quarter point hike in February? It has been slightly discounted. We'll probably see if that column gets quite tall, look for a pullback in stocks, which in certain corners of the market, we're going to be looking at to buy. If he takes it off the table, that column in February will contract. It will sink, and the 350 to 375 will increase. Equities are going to love that, and you will see just a rip higher. So that's how you measure what he's saying is the impact ultimately to the market. Very easy to do that way. I hope that helps. So yeah, maybe, maybe not. We'll see, but keep an eye on those columns. That's where the action is. Avi asked, when the HPMR from the right or left, when the HPMR from the right or left to the price, not in this. Avi, I'm not quite following the question. Is the HPMR, so whatever the current HPMR is, whichever one. So let me show you what they look like right now. For example, on the S&P, the one that's relevant is the one that's visible. So in terms of the HPMR on, say, the S&P, these are the old HPMRs that took me from 6 to 7, from 7 to 8, from 8 to 9, and now I'm looking at the 9 to 10. So whichever one is along the right edge, that's the one that's valid. All right. Okay, next up is my opinion on ECL. Sure. My opinion on ECL. It gapped up. I don't play gaps like this. In other words, once a market is gapped up, the problem is, does the market want to close the gap? What was the reason? It is an uptrend now, but I won't buy into a gap, Stephen. Keep an eye on it. Might be interesting to, oh, sorry, that's the intraday, but it did gap up yesterday. So the problem is here, since it did gap up, I'm not going to buy it up here. I guess that's the main thing to say. I'm not going to buy it up here near the 172 area. If it dips back down into the wave, double green. So the day that I want to buy, the 2 days that were really viable for me, just to get an idea of my window, Stephen, 822 and 823. Those are precisely the kind of lower sessions into the 21 propulsion or into the 34 EMA wave that I'm going to be waiting for. So thank you for the question. Good looking stock. Let's wait to see it go on sale. Maybe it does today with whatever volatility Powell could trigger. Starting at 10, by the way, gang, it's a caution day. Hot zone starts at 10. All right. So ultimately, what we want to remember is that there are setups that we have on the daily time frame. And if we pull back to that zone, it's just an entry zone that now is valid. If we start seeing outsized moves that are outside the historical volatility, that's where, to your point, Delta, don't fade Fridays may kick in. But if these are within normal price movement range, historical volatility parameters, I'm not going to sweat it. And remember, we have our agro, moderate, and conservative zones. And most of what we're doing between now and deeper pullbacks are simply agro. So we're using very small amounts of budget to keep our risk controlled. Great question. All right, gang. As always, thanks for joining us. Caffeinate and dominate. Today's a caution day. I'll see you Sunday for our 6 p.m. weekly Raghee report. And until then, gang, be good to each other. I'll talk with you soon.